Welcome. In this video, will Xcn coin come a second bullish wave? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking at the chart in general terms, it is noteworthy that the price movements have been moving in a fairly stable uptrend for a long time. This type of uptrend structure is one of the technical formations that traders follow with confidence and often take buying opportunities. The fact that this trend is significantly upward suggests that market participants are mostly optimistic, with prices aiming for higher levels over time. Rising trend lines are considered strong support zones in technical analysis. In particular, when the price approaches this line, it acts as a trigger for buyers to step in. It is observed that a similar scenario is currently in preparation. The price is trading very close to the ascending trend line, and as in previous examples, a possible contact with this area is likely to trigger a strong upward reaction. In this type of trend structure, each bottom is formed at a higher level than the previous one. This tells us that the market is generally in a positive trend, and that buyers see every pullback as an opportunity. This is exactly what the current structure reflects. The gradual approach of the price towards the uptrend line suggests that traders may take positions to reassess these levels. In such cases, it should be noted that even small volume declines in technical terms can reverse very quickly, and the upward momentum can gain strength in a short time. Looking at past price action, we can also see that the reactions from this trend line have been quite strong and long-lasting. This means that when the price approaches this area again, buyers will not hesitate to re-engage, because in the past, every reaction from this line has taken the price to higher highs. In technical analysis, such historical examples offer important clues to similar price movements in the future. A new contact with the same trend line could be the start of a strong uptrend, as it has been in the past. The rising trend line is not only a support point, but also represents the general direction of the market and investor psychology. Maintaining this line indicates that market confidence remains and investors are still supportive of this uptrend. If the price bounces off this line, it would not be surprising to see new highs. In particular, rallies following such trend lines are often not just a short-term reaction, but can also open the door to a longer-term rally. In addition, this rising trend line may also coincide with other important technical levels. For example, if Fibonacci retracement levels, past resistance support reversal zones, or areas of volume concentration converge at the same point as this trend line, this is no longer just a technical but a psychological support zone. Such overlapping technical levels make it more likely that the price will turn around. In traders' general strategies, contacts with rising trend lines are considered as low risk and high potential buying opportunities. Therefore, the approach of the price to this trend line may also be on the radar of large investors. This is because professional traders often anticipate reactions from trend lines and build their positions in such areas. This can lead to an increase in volume as the price touches the trend line and the price can bounce up quickly. But we can't decide the analysis only with trends. Let's look at other metrics. Stay tuned. Looking at the chart in general, it is clear that the price is currently positioned in a very critical zone. In particular, the resistance line just above the price is a barrier of great importance in terms of technical analysis. Such resistance zones stand out as levels that the price has tried and failed to cross many times in the past. However, this situation can also be a harbinger of an important opportunity, because the price's repeated approach to this area is an important sign that shows its determination to overcome it and that buyers are getting stronger. The meaning of this resistance level in technical analysis is quite clear. If the price manages to break through it, there will be no new obstacles in its way, and this could potentially herald new highs. Resistance zones in particular are areas where the struggle between buyers and sellers intensifies. Every time the price has approached this level, there may have been pullbacks due to selling pressure in the past. But now the situation looks a little different, because the price is no longer weakening as it approaches this resistance, but continues to move stronger and more decisively with each contact. One of the things that traders pay the most attention to is how often the price tests resistance levels and how strong it stays there. As we are currently observing, the price has repeatedly approached this resistance level, and each time it has managed to hold on without experiencing significant pullbacks thanks to the strength of buyers. This is a very positive development in terms of technical analysis, because the more resistance levels are tested, the weaker they become and the more likely they are to eventually break. Above this level, there are empty areas that have not been tested before. This process, called price discovery in technical literature, starts when resistance is broken. The upward movement of the price in such areas is usually faster and more voluminous. This is because sellers are no longer taking positions, while buyers are willing to move the price up with strong demands. If this scenario materializes, the price not only breaks through the current resistance level, but also has the potential to quickly make a new high. Moreover, this resistance level may be important not only technically, but also psychologically. This is because traders often focus on such levels carefully, and if the price breaks through it, many investors would prefer to take a position. This leads to an increase in buying volume. Large investors and institutions in particular may buy aggressively at resistance breakouts, pushing the price even higher. This could open up new opportunities not only for short-term investors, but also for medium and long-term investors. If the price breaks through this resistance, the new high would also have a very positive impact on market psychology, as it would mark an unprecedented level. Such new highs would reinforce the perception among investors that the uptrend continues, and this perception may cause the price to move upwards for a while. In other words, a break of this level is not only a technical development, but also the crossing of a psychological threshold. To summarize, the current position of the price is at a very critical point. The resistance level above it stands as an important barrier in both technical and psychological terms. However, the current technical structure shows that the price has the potential to break this resistance. The increase in bullish volume, the protection of support levels, the positive signals of trend indicators, and the steady approach of the price to this level indicate that the resistance breakout may occur very soon. A careful look at the chart clearly shows that price action continues to hover above the 200-day exponential moving average, which is a highly critical technical indicator. This is considered a very positive signal in technical analysis. This is because the 200 EMA is one of the most important reference lines that long-term traders and major players take into account when determining direction. When the price stays above this average, it shows that the overall trend is still upwards and most of the market participants continue to take buy positions. Staying above the 200 EMA is not only a technical advantage, but also psychologically reassuring for the market. This average line acts as a strong support line in the market, and if the price stays above it, traders can rest assured. This is because historically, when prices fall below the 200 EMA, long-term downtrends usually begin, while prices above this line usually signal the continuation of uptrends. Especially in cryptocurrency markets and financial instruments with high volatility, the importance of the 200 EMA becomes much more apparent. Because while short-term fluctuations are common in such markets, a reliable average line is needed to determine the long-term direction and filter out the noise. This is where the 200 EMA comes in. This is why we need to look at the 200 EMA. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.